Hey guys, this is Crypto Marie. She does it all, a little bit of everything. I am going to give you the latest on what the Fed said about the basis 0.75% because we can tell after everything drops. I mean, the market was already not doing well, but now everything is on the red. So remember, whatever I said, I'm not telling you to sell or buy. Do not panic sell. Always do your own research before you purchase any coin. Right now, although everything is looking down, everything is red, for me, it's an opportunity to add more to my portfolio to balance my account to DCA, which is average cost. Because at the end of the day, yes, right now we're in the bear market, but it's not gonna always be like that forever. So now it's a chance to add if you can, and if you cannot, just hold on tight to what you have. Okay. So full recap of the Fed's rate hike and Powell's comment on the outlook for future increase. The Federal Reserve announced that it will raise its benchmark rate by 3/4 of a percentage point on Wednesday afternoon in its late attempt to crash inflation. Chair Jerome Powell gave an update on the central bank's economic outlook and forecast for future rate hikes. Excuse me. I'm hoping everybody's doing amazing, although the market is not doing good. Powell says Fed will plan for the worst on shelter inflation. Fed Chair Jerome Powell said that the central bank will not count on the lag impacts of shelter costs and the inflation metrics when determining its policy moves. I think that shelter inflation is going to remain high for some times. We are looking for it to come down, but it's not exactly clear when that will happen. It may take some time. Hope for the best, plan for the worst, Powell said. That right there will knock the market down. He did not sound positive at all. This is ridiculous. Shelter costs, especially rent, has become a key source of inflation in recent months. And oil and other commodity price come down because of how the metric is calculated. Rising rents show up with a large and the official inflation data or data, however you want to say it. I'm just gonna read what it says, guys. It's not good. 75 if the new 25, says Bill Zucks of Brandywine Global. As the Federal Reserve vows to continue raising interest rates to damp down on inflation, investors should brace for additional hikes of 75 basis points in the future, said Bill Zucks, portfolio manager at Brandywine Global. Projection from the central bank's meeting indicated participants expect to increase rates by at least 1.25% point in the two remaining meetings this year. Why so many meetings? Why? I hate those meetings. Seriously. I believe 75 is the new 25 until something breaks. And nothing has broken yet, Zach said. The Fed is not anywhere close to a pause or pivot. They are laser focused on breaking inflation. A key question is what else might they break? Powell says inflation has not really come down despite some supply side healing. Fed Chair Jerome Powell said the inflation level hasn't fallen as much as the central bank had expected it would be at this point. In the press conference Wednesday following the 2 days policy meeting, our expectation has been we would begin to see inflation come down largely because of supply side healing. He said, we haven't. We have seen some supply side healing, but inflation has not really come down. Those are negative stuff, negative words coming out his mouth. That's why the market is really going down. He said that core PCE inflation on 3, 6, and 12 months trailing annualized basis is now at 4.8%, 4.5%, and 4.8% repetitively. That's a pretty good summary of where we are with inflation, and that's not where we want it to be, Powell said. We need to continue, and we did today. Do not large increase as we approach the level we think we need to get to. We're still discovering what that level is. This is ridiculous, yeah. This is ridiculous. Stocks recovers as Fed tees up more rate hikes to tame inflation. Stocks rose as Federal Reserve Chair Jerome Powell pledged to boost rates to slow down inflation. The central bank hikes interest rate by 75 basis points for a third consecutive time. The major average initially slipped, but the recovery during Powell's question and answer session as he reinstated no, as he reiterated his tough stance on fighting inflation. The Dow Jones Industrial Average leaped more than 100 points. The Nasdaq gained 0.9%, and the S&P 500 added 0.6 around 3:04 p.m. Eastern Time. No one knows if the federal hikes will mean recession, Powell says. The Federal Reserve has always understood that it may be difficult to manage a soft landing while raising interest rate enough to tame high inflation. No one knows whether this process will lead to a recession. If so, how significant that recession would be, Chair Jerome Powell said Wednesday. That's going to depend on how quickly wage and price inflation pressures come down, whether expectations remain anchored, and also if we get more labor supplies. He added that the chance of a soft landing will diminish if policy needs to get more restrictive for the Fed to reach its goal of 2% inflation. However, high inflation would inflict greater pain long term, he said. All these things are not helping the market. All sound negative, y'all. Speed of rate hikes, adds risk, CFRAS Stovall says. With the Federal Reserve signaling that it will push its benchmark well above 4%, including potential another large rate hike this year, the central bank is increasing risk for investors and the economy, according to CFRA Chief Investment Strategist Sam Stovall. With the FOMC now setting a higher for longer interest rate policy, the pace of the dance has picked up, increasing the risk that both spin out of control. The Fed increases its year-end rate to 4.4 from 3.4 expected after the June meeting, Stovall said. Guys, from everything that I've read so far, it doesn't sound positive. That's why the market is plunging. Powell reiterates his stance from Jackson Hole, says Fed is committed to 2% inflation. Federal Reserve Chair Powell said Wednesday his views haven't wavered since his market jolting speech from Jackson Hole a month ago. My main message has not changed since Jackson Hole, Powell said. The FOMC is strongly resolved to bring inflation down to 2% and will keep it at until the job is done. He added that so far there is only modest evidence that the labor market is cooling off, citing a slight decline in job openings that quits are off their all-time high and that payroll gain have moderate but only by a little bit. The central bank will need to bring the funds rate to a restrictive level and keep it there for some time. To do that, It will be looking for three things: a continuation of growth running below trend, movement in labor market showing a return to better balance between supplies and demand, and clear evidence that the inflation is moving back down to 2%. Reducing inflation may require sustained period of below trend growth, Powell says. The Federal Reserve is still committed to using its tools to bring high inflation back in line with its target of 2% and keep long-term expectations steady. But that may take longer than expected and hurt the labor market. Reducing inflation is likely to require a sustained period of below trend growth, Federal Reserve Chair Jerome Powell said in Wednesday's press conference, and it will very likely mean some softening of labor market conditions. He also hinted that a hit on the labor market may be wafted over the long term and that the central bank will stay the course to get to its goal. Restoring price stability is essential to set the stage for achieving maximum employment and stable price over the long run. Powell said, "We will keep at it until we are confident the job is done." Well, I don't know. He just scaring everybody because the market looking red right now. Uh, Sharper hikes could be ahead in 2022